Hi everyone. Uh, as you all are aware that UAE FTA has issued public consultation draft of the corporate tax law. Recently, in some 1 week ago, they issued public consultation draft. On that draft, we have made some of our analysis. We are going to discuss about that in this video. Like UAE proposed worldwide taxation of corporate income. If control and management of a foreign company is in the UAE, they are subject to the corporate tax in the UAE. If the any foreign company, their permanent establishment is in the UAE, then they are also subject to the corporate tax in the UAE. Like control and management should be in the UAE in that case. In case of free zones company, they are somewhere subject to the corporate tax and somewhere they have given zero rate corporate tax benefits. If they are doing businesses located outside of the UAE, with the outside of the UAE, and trading within the same free zone and with other free zone, then they will enjoy corporate tax rate 0%. And if they have any income from the mainland company, only pays passive income, like they are earning dividends, interest, like this incomes, only this kind of incomes, then those free zone companies, those incomes of free zone companies will also be subject to the zero rate corporate tax. If a free zone person sells to the mainland business where such mainland business is a importer on record, only importer on the record, that also subject to the zero rate corporate tax. If there is any mainland source income, it will disqualify free zone person from benefit of 0% corporate tax. If there is any international domestic transaction between related parties and connected person, those transactions will be subject to the transfer pricing. Those transactions should be at an arm length price. Otherwise, if related party or a connected person transaction exceeds certain threshold benchmarking, and documentation will be mandatory. Government want whatever transaction happening with between related parties or connected person should be at arm length price, should be at a fair value. We can say interest expenses are capped at 30% of EBITDA, earning before interest, tax, depreciation and amortization. Interest expense can't be more than 30% of EBITDA. Minimum adjustments are proposed to book profit, and no separate depreciation or amortization rules are proposed for the time being. Losses can be carried forward subject to the condition. Group relief, restructuring relief is also proposed. Return should be filed within a ninth month from the end of respective financial years of each company, every company. Those are the some analysis from our side. Remaining, when law will come into existence, the full-fledged analysis of the law will be done by me, inshallah. For the time being, thank you very much. Keep reading, keep updating.